I would say the probabilities favor the top is very close to be in. I would say max upside is 25,000 here. Again, basically at this point, anytime you go into a Fed decision, let's be clear, it's kind of a gamble as a trader, right? You don't know exactly what he's going to say. You don't know how the market is going to react. In general, if I had to choose a position here, I would be short Bitcoin, understanding that it could go up to 25, but the downside likely takes us back to the 18-ish level or even lower. So I think the risk reward favors the downside.
Now, just to chip in and support Gareth's theory there, you could take a short position and have a stop loss at 25,000 and you would be okay to do so. I think you'd be fairly safe. We did not break above the 24,300 area, which is where a solid order block is in play. And we did newly form order blocks at 24,022 and 23,850. So there is some selling activity at the top of this price, and again, to support Gareth's theory that we could go down to 18,000, we would have to break these order blocks here at 21,175, but definitely down at 18,860, pretty much on the nose. I think we could easily sell down to that price before going back up, and certainly that would happen between now and June of 2023. So back to the video.
But again, just be aware, there's anytime you get earnings on a stock or news like this in the Fed, it's a wild card. There's always some risk involved there that it could pop quickly to the upside before reversing to the downside. If we get to 25,000, I'm shorting, basically on a Pierce of 25, I would short Bitcoin as a trade. Based on the macro charts, and that's using the weekly and the monthly chart, to me, this still tells me there's some downside to go. If we flip over to the monthly here, it's been a tremendous bounce. But again, as of now, this is just a small drop in the bucket bounce. I would still be nervous that we're still going to have one final rollover. I still think the macro side is what concerns me most. Is number one, we don't have any regulation yet. So what the heck is that going to show? Like, what are these altcoins going to have to do to kind of figure out the SEC's new regulation when it does come? And then also you have to look at still how many cryptos are out there that have almost no utility. And at what point do they finally go down essentially to zero or just stop trading? And I still think it's a way too crowded jungle out there of cryptocurrency. So again, also factoring in that I've never seen a bottom in a market, in a bear market, where bulls came back in this strong, this quickly. Now, again, it is crypto, which is unique, but still, it doesn't remind me of 2017. In 2018, when we bottomed out, the first move up, no one was talking about it. No one said a word. Everyone was too scared.
And again, I just wanted to confirm that against Gareth's theory is that, we haven't hit 25,000 and we're likely to go down first, which is what we've started printing right now. But if you look at the order blocks and go above this price, there's absolutely no order blocks above this, which means we do have to take out the prices on the way down. So eventually, yes, we will come up and swallow these prices up before going back up. But similarly, below this price, you do have order blocks at 21,000, at 18,860, down at 17,202 and as low as 16,800. So I firmly believe that we would have to come down to these prices first before going back up into the bull scenario. And here you have a massive liquidity trap to take before we go back up. That is just a theory, but again, above this price, there's absolutely no sell order blocks above $25,000. So again, taking out these prices would not be unheard of. Taking out all these before going back up into the bull cycle between now and June. Now, I'm not saying the bull market starts in June. What I'm saying is these prices would have to be taken out by around June.
But when we finally took up, once we got over 20,000, everyone started jumping on the bandwagon. And we can go back here, right? So basically you had this little push up here. Well, first of all, we even had this one, right? So let's go back here and look at 2017 real quick. Bear with me here as we scroll all the way back. So when we bottomed out here, you had this nice initial bounce. And by the way, it went from 3,000 all the way back to 4,300. which percentage wise is almost what we bounced right around here. And then we actually trailed off and went sideways and chopped around. Then we finally had another move, but you didn't see bulls coming on board till really we got north of 10,000. Like at that point, Bitcoin had tripled from the lows before bulls really came on board. And even then, look at this. We even came back and tested 3,000 again, back over here. So again, in 2018, 2019, with Bitcoin, we did not see that bullishness that we're seeing now when we came off the lows like this. And that's a concern to me. Right. Think about how many people have jumped on board. I mean, I've seen so many posts on Twitter saying the bottom is in from major influencers. And it may be, but that does concern me, right? When you get the kind of the masses to buy into a narrative, that's usually where the bigger money says, oh, this is great. We can unload into it. We'll flush it one more time, wipe them out. And then finally the bottom's in. So if you go back to like 2009, when we finally bottomed out, the small retail investor didn't get back in the stock market to a maximum until like 2020 when COVID hit. I mean, think about that amount of time. It was called in the stock market the most unloved rally from 2009 to 2019. You know, so basically 10 years, and the retail investor was too scared because their 401ks got wiped out, their retirement. I mean, everything got wiped out in 2009 that they were too scared to come back in until we got to 2020. And so that you're not seeing that in crypto yet. So it is a concern for sure.